How does the Sunway REIT compare to the Hectares REIT and Axis REIT?
Sunway REIT in terms of value is a lot richer compared to the Axis REIT and Hectare REIT. It's probably coming to the market at around 7% yield, when your Axis REIT and Hectare REIT is trading at around 8 to 9% yield. But the attraction of it from investors' perspective is that it's a lot larger and it'll be a lot more liquid. For example, the liquidity of Sunway REIT will probably be about 70 to 80% of all the combined Malaysian REITs. And secondly, I think a lot of insurance money has been looking for real estate exposure, and some of them might not have the ability to buy buildings directly. And REIT as an asset class is actually quite attractive for them because of the relative stability of the yield. But up until now, they could not really find any sizable REITs for Malaysia, and this one will be the largest. It's about 2 to 3 times the size of the next largest REIT in Malaysia.
Under a REIT structure, I understand that income is tax exempt provided that at least 90% of the earnings are distributed as dividends. What's your take on the dividend policy for the Sunway REIT, as I understand there's no indication yet on a special dividend payment?
As I understand it, the company will be paying out 100% of the income out as dividend for the next 2 to 3 years at least. So for at least the next 1-2 years, it's quite certain that you will get your full payment in terms of dividend, and that translates to about 7% to 7.2% yield, depending on the pricing.
I understand that the key risks for the Sunway REIT, or say Sunway City actually, are poor take-ups for property projects, delays in new launches, as well as margin disappointments. How much weight would you put on these risks?
The Sunway REIT is actually only consists of assets which are already completed and fully operational and have a track record of doing business. That is the only assets which are going into the REIT at this moment. The risk for this asset class, in our view, is that the interest rates continue to rise, which makes this relatively less attractive as an investment. And if investors think that the property cycle is in the wrong cycle and they do not look at this asset class with favor anymore. So those are the 2 key risks that we're looking at.
Just out of curiosity, how much of the Sunway REIT are you going to be buying?
We are only interested at it for some of our longer term, more conservative funds which have a hurdle rate of maybe about 5 to 6%. For funds which have higher investment needs, this REIT is actually not suitable.